Back at it again here with another video with Invest for Tomorrow, and all I ask for in return is for you guys to smash that like button. Let's see if we can get today's video over 40 likes. And here we are with the S&P 500, the SPY. The S&P 500 index is starting to push up higher here from a dip area and from the new 52-week lows from last week, guys. This is getting very interesting how it's trying to bring itself back up. It's broken through key resistance levels, and now the question mark is, will it continue or will it hold here? We need to break it all down in today's video. And today our SPY bot since 10:05 a.m. sent out a bull indicator, and from that moment forward, inflows picked up and call options went up 150% plus within hours, guys. If you guys want to receive this clarity and edge over the charts, you can now gain access to it as well and join a community of members using these resources to maximize in either direction. The link is down below in the description to the 42 vision indicator and getting connected over to our bots. So the SPY here, guys, a lot of negative news about Credit Suisse with the turmoil that deepens, and then you also have these headlines here of Credit Suisse in deep trouble and being compared to the US bank Lehman Brothers of September of 2008. We're going to break down all the things going on with this, but before we break it all down and look at the charts, I want to share with you guys the Homerun opportunity I mentioned this morning over at the Discord. And as you see popping up here on the screen, these are some of the home runs I managed to find last week alone. And while not guaranteed to be this way every single time, we strive for opportunities like these every single day. So the Homerun opportunity was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So these are the three stocks I mentioned this morning. All three of them gave jumps of 3 to 5%, 5 to 10% plus, but one of them nearly reached home run territory, and that was CSCW. We caught this one in the pre-market under a bull indicator, full strength here, sitting sideways towards the bell and pulling back towards it, and it hit a dip area here, found support, bounced back up with full strength here, and within minutes, the inflows were above the midpoint. They switched from red to green and full strength on 42 vision, and it gave a highest point of 18% plus, guys. If you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. So here we are with the SPY, and as I stated earlier in the video, going through a complete transition here on 42 vision. I'm going to pull up the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected to the SPY bot, the QQQ bot, our newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities, whether stocks are going up or going down. And you can now join the members using these resources to go ahead and maximize in either direction by receiving this clarity and edge over the charts. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. And here we are, and slots are now open for the inflow versus outflow and 42 vision indicators for those interested. So the SPY under a bull indicator here since the pre-market, and then shortly after the bell at around 10 a.m. the inflow started to pick up, right? They actually crossed the midpoint and continued, and we've been above all day today. So you could see all that buying pressure going into it after Friday's outflows, and on the 30-minute we were sitting sideways here, and I did state that based off 42 vision we had hit a dip area, and I was going to be watching if we start to transition back up, cancel out that bear indicator, get a bull indicator, and if those inflows come back towards the midpoint or cross it, it could have an impact on the charts. And from the moment it crossed it, it actually had an impact, and we've gone up $7 since the open, right? From 360s to 367 in a matter of just hours. Now, on 42 vision, this is what we call the dip area, and this is what we call the rip areas. And what happens after the rip area? There tends to be a downfall, right? Or at least a point of exhaustion, especially once it transitions into dark green with red borders, followed by a bear indicator and outflow starting to dominate again. And if they cross and that bear indicator is still in effect, it could continue back down into a dip area, right? That's what 42 vision is all about, to allow us to see the dips from the rips and the rips to the dips, as well as the bull and bear indicators are there as extra layers of confirmation in our inflow versus outflow to see the strength of possible moves in either direction. So here we are with a complete transition, and on the 15-minute, you could see full strength all day. There has been some points of outflows, as you saw that little pullback, but picked right back off there with strength, and the inflows picked back up, and it's been above the midpoint all this time. Now, when you go ahead and look at these headlines, they're actually talking about and comparing the Credit Suisse with Lehman Brothers in September 2008, and I've seen a lot of data points that could create that critical effect of why Credit Suisse is on the brink of possible collapse, right? And they're using that as the example. And how does that play out into what's going on here with the SPY? Well, you have to zoom out, right? You got to look at this from the 1 day. We're actually in a dip area here, and I stated in several videos already how in the previous times that we were on the 1 day chart, we hit dip areas of about 5 to 4 of these after or before actually trying to go ahead and come back up. And the last 2 times have been pretty weak, but the strongest one was the one when the bull indicator popped up and the inflows picked up, right? And that's where we rejected up here at the 430s. We've been in a downtrend, and we've hit 4 of these back to back. We've kind of sat sideways, and we hit 3 more of them, and this is our first white with green borders. Now, this is just the beginning of a possible reversal if it continues to go higher, and you could see that the outflows are no longer going downwards in a very steep way. If not, the outflows are sitting kind of sideways, and I've also pointed out that the previous outflows had hit lows here of minus 36 and also down here minus 45, 44, give or take, and we were watching here the outflows as we reach those levels if we continued to break through them or fall somewhere around those areas and find support. As you can see here, we're at minus 35. So based off the history of the chart, if we find support here, it could try to have another run like June all the way into August, but not guaranteed. And if we go actually lower, well, based off the history of the chart in the inflow versus outflow indicator, we still have room towards minus 46. Doesn't guarantee it has to stop there. It could actually go further, but we know we have room to go lower if this tries to actually pull back down after this trying to go back up if it turns out to be a fake out, right? So right now, there's no bull indicator. We're still under a bear indicator, and this just continues to be volatility, as I always state in my videos. Just my opinion and perspective alone, I don't think volatility is going anywhere. If anything, it's here to stay, and having a clarity and edge over the charts makes all the difference, guys. So here we are with the 1 week, and when you zoom out and we go all the way back here to 2008, as it's being compared, in 2008, a bear indicator popped up. In 2007 and 2008, it was sitting kind of sideways here, and towards the end of the year of September to October, November, and all the way into the beginning of the next following year of 2009 is where the big dip and fall happened, and the outflows were dominating, and they pulled down substantially. They hit lows here of minus 54. So if Credit Suisse turns out to be the next Lehman Brothers, well, based off history in 2008 as they compare it to, there's still room to go. Now, I've compared our current correction / crash to the 2000.com bubble because there was a moment here based off the 1 week, as you see here, the bull and bear indicators that actually kind of go ahead and cancel each other out pretty quickly, happening here on our charts in the most current type of pullback that we've had in our crash, right? Which was right here, right? Very short-lived, shortly after, canceled each other out, and then you have here the outflows again dominating. So based off the 1 week, we still have room to go lower. We're only at minus 30, and the last time we hit minus 63. And in the 2020 crash, we went ahead and hit minus 88. So we still have room based off history, right? We have things to watch here. Is it going to try to level off here and try to bring itself back up? That's the question mark. And then also here, we haven't hit a dip area, right? We haven't hit white with red borders. If not, it's just red bars. The last time we actually had a run from June to August, we had hit the dip area 2 times before trying to reverse back up. And then if you go ahead and zoom out even further and we go to the 1 month, you could see here that the outflows are dominating, and based off the history of the chart, it still has room based off of the 2008 and also .com bubble going all the way down to -70 and -53, and we're only at -37 in the current pullback. And we got a bear indicator here back in June. You could see that run that just happened and it got rejected, and here we are right in this whole entire downward trend. So we need to watch this carefully, and within the volatility, I personally believe there's opportunities, but it does not mean that we're out of the woods. Right now, in the last several videos and last week, I kept talking about how we were stuck within this channel and multiple opportunities to the downside, as you see there, and to the upside and back down, but we kept rejecting 370 and the bears would come back up. We kept rejecting obviously 360 and the bulls would try to reappear, and then we finally broke out of the channel here on the end of Friday, and now we're coming right back into it. And the question mark is, will we break through the resistance? If we do, the bulls could start to try to make this run even higher, and a lot of shorts could possibly be covering their positions. But it does not mean, in my personal opinion, not financial advice, that the bear market is over. If anything, it's just opportunities, right? Volatility presents opportunities, and especially with an edge over the charts. Once again, if you want to become part of a growing community of investors using these resources, such as our inflow versus outflow indicator, bull and bear indicators, and 42 vision, check out the link down below in the description so you can receive the edge and clarity that you deserve. But this is where opportunities are actually able to be maximized on when things get moving this way, right? But it does not get us out of the woods, because then we have this actually looming in the air of Credit Suisse, all the different negative headlines, all the different negative things that still hasn't really popped, right? If it's actually going to even happen. This is speculation right now, nothing guaranteed. And then also in the process, we have CPI data coming out soon next week. And then we also have to see how the Fed is going to rate hikes and what their forward-looking guidance is. So volatility, in my personal opinion and perspective, not financial advice, once again, is here to stay, guys. And within it, there's maximization points, and it's going to be critical to watch. If we stay above 360, we're right now going towards 368. I mean, this has been a very volatile upward pressure move. And how is it going to react when it gets to 370? If it breaks through it, the next resistance is 372. And then above that is back up towards 378, and we'll have to see the strength there. But the inflows right now are dominating, and I'll be watching if they can continue to pull further away from the midpoint, because right now, based off the history of the chart and the inflows of September 28th, we hit highs here of 758, and we're only at 521. So I'll be watching that carefully here on the 30-minute, and also how the 15-minute continues to react as it's pushing up higher, and how it actually finds support at higher levels. As always, guys, thank you guys so much for watching, and let's make some money.